Texas. Let's get back to these markets here. Red and green on the screen. Not a lot of direction here, but a lot going on underneath the hood here. Tom Hulick joins us here. He's the CEO at Strategy Asset Management based out there in LA, but we got him in studio today. Tom, thanks so much for joining us here. This is a market, we were just talking with Alex, we're making new highs every day, but we got a shooting war out there. We got inflation that's moving higher. What's going on out there?
You know, it's great to be here. A lot outside of all the risks that are out there, geopolitical and kind of the strains around the politics. You know, the markets are set up to do quite well over the next couple of years. And you know, as an asset manager, I'm an active manager. You know, we take a look at the trends that are out there and all the capex expending it that's going going forward. It sets a nice stage for the earnings momentum to continue at the the 20 to 25% clip. So we're pretty optimistic.
Tom, the theme going into this year was it's going to be a year of participation and broadening, and that certainly happened in the beginning of 2026. But recently, this market has been led by the tech high flyers, by semiconductors. What gets more sectors involved in this rally? Right.
You know, we've been talking about the market broadening out for years, and you know, the hope is that it would get away from the Mag 7 stocks, and now it's expanded out to the the Mag 10 that are there. But soon enough, you will see the market broadening out, and that's where the asset managers are starting to focus on. So we've got sectors in like the industrial sector. We like obviously like technology, but you want to see the market broadening out. That's a healthy sign, and we will see that soon.
We're going to get a monster IPO coming out. Elon Musk 0.20, I guess, with SpaceX. Are your clients calling you up saying, Tom, get me into this thing?
We have a few people calling up, but we don't have access to it. You know, we're not one of the fortunate people. I don't know anybody in this room that may be there, but you know, we like the momentum. We like the liquidity scene out there. When IPOs come out, that's a healthy sign for the market. And would we buy SpaceX, Anthropic, AI, possibly sometime in the future? Yesterday, I was pretty emphatic, with my team saying, we're not going to buy it at the open. We don't do that. We're a large cap asset manager, and we focus on certain things, but it's a positive sign for the market in general.
I was looking at some data recently. Just 28% of active large cap equity managers are outperforming the S&P 500. That is one of the worst showings in 2 decades. How hard is it to be a stock picker in this environment?
Well, I'll tell you what, we're part of that 28%. So high five to us, and we've been doing that for years. The firm's been around since 2001. Being an active manager is tough. You always get pegged against the indexes, but we've got a growth, value, quant, and a global portfolio. So we're going to be up in any type of market, which is nice. But it is hard to perform. But it takes a good asset manager to look at the forest through the trees. And we think we've picked the right sectors, and we're very fortunate to have outperformance this year.
So what are some of this? Is your approach sector driven? Is it factor driven? Is it asset allocation driven? How do you kind of start from the top down?
At Strategy Asset Managers, as I said, we have those four separately managed accounts, and I'll highlight one of the stocks that we're talking about potentially today is in our growth portfolio, JBS. Okay. They're the largest beef and chicken processor in the world.
You got to make more cows is the problem.
You're right, but when you look at the whole kind of the substack, and you take a look at drugs like Lilly's retatrutide that's coming out, and Zepbound, Wegovy, all those, they're reducing obesity, but they're also causing you to eat more protein. So we kind of look downstream and what the benefactors are going to be out there. JBS is nicely set up to do that. More people are eating protein around the world, so we like the JBS stock against the Lilly stock. What do we pick? We look at the sectors, and we really like the infrastructure build out. The United States government is putting a lot of money into the building of Build Up America again, the reshoring of everything. You follow the money, follow the smart money as portfolio managers. So sectors are important, and specific stocks are also key as well.
We have this pipeline of mega IPOs, SpaceX, Anthropic, OpenAI. What do you say to those who suggest that this is a sign of frothiness, that things are getting a little too euphoric?
Well, it encourages people to be optimistic on investing in general. It gets more people involved. Elon Musk is a brilliant mind. Anthropic, AI, these are hopeful things that we're getting a taste of as we develop into the next 10 years. I mean, the speed of chips is there, but it's not just the speed of one chip, it's how many chips can communicate all together. So if you go back to the story of copper wiring and maybe GLW and Corning and Sienna, now it's the talk of photonics. How can these chips communicate directly together faster and coordinate information that we need to have? It's a great story build up. These IPOs are giving us so much room to grow and expand the economy and contribute to the earnings growth that we have out there. We're going to see this for years to come. Years to come.
Yep, that's the bullish call for sure. Asset allocation, how do you guys think about that these days? Because it just seems like, I'm not sure if are you guys in that 60-40 camp? Do you have an allocation of alternatives? How do you think?
Yeah, we have balanced portfolios, and bonds are good, especially with these yields right now. But you know, we're an active manager in stocks. We were a value manager when we started out, and we still are, and most managers could be that way. But it's important to know what to own and know what to not own. And so as an active manager, we're glad to be outperforming against the indices right now. And I think that's going to go further down the road.
Good.
And just about a minute left here, Tom. If there's one thing that's keeping you up at night, what is it? Paul mentioned there's no shortage of macro risk right now. There's a new Fed chair. There is geopolitical turmoil. What is it that might topple this?
Well, I'm fortunate to have a lot of different resources to go off of. I participate with the Hoover Institute. We're an active manager. We follow Bloomberg quite a bit. And so all the information that flows into what keeps us up at night, obviously the war. Geopolitical tensions are important. Interest rates, they're not sustainable at this level. Eventually, they're going to have to come down because the U.S. debt is insurmountable. Consumer confidence, is the consumer going to continue to lead? They're still, buying. If you ever go out to the mall or the weekends, and the parking lots are still full, and people are they're just shifting their spending habits. But we look at those macro factors, and I think that. I'm more glass half full than half empty, and I do think there's a lot more room to move forward in these markets.
All right, Tom, thank you so much for joining us. Really appreciate it. Tom Hulick, CEO, Strategy Asset Managers, joining us here in our Bloomberg Interactive Broker Studio. S&P absolutely unched on today. Nothing happened, and the Dow's up 300, and the Nasdaq's down 55. This is Bloomberg.